Welcome everyone to Vested Interest. This is Shane back again for another stock pick of the day. It is a brand new week. I hope you had a great weekend. For those of you who may have spent some time celebrating Memorial Weekend, hope it was a blast for you and you got to spend some time with family and friends. We are back at it Tuesday. The market was closed yesterday on Monday, so first day of the trading week, Tuesday, May 30th, and we are quickly wrapping up another month. One more day left in the trading month of May, and then it's on to June we go. Today we are going to take a look at General Dynamics. That's this logo here. They are out of the industrial sector. They are a big company who makes a lot of military equipment. Let's jump right in and take a look at the video. If you want to know more about them, check them out, www.gd.com. That is their homepage where I pulled this information from. Like I said, out of the industrial sector, a lot of years involved in the military industrial complex. For those of you who may know what that means. Incorporated in 1952, General Dynamics is proud of its history serving the aerospace and defense communities. From 1952 to 1990s, the company provided tanks, rockets, missiles, submarines, warships, fighters, and electronics to all of the military services. In early 1990s, we sold nearly our entire portfolio except for our military vehicle and submarine businesses. Starting in the mid-90s, we began expanding again by acquiring Gulfstream Aerospace Corporation, combat vehicle-related businesses, IT product and service companies, and additional shipyards, forming the foundation of our company today. We continue to expand our business through organic growth and acquisitions. We focus on delivering superior products and services to our customers and creating value for our shareholders through relentless focus on operational excellence and continuous improvement. So really, right, aerospace and defense company out of the industrial sector. Again, so long as we're having wars like the one that's going on between Russia and Ukraine right now, I don't think companies like this are going anywhere, unfortunately, or fortunately, if you're an investor who likes these kind of companies. This provides a pretty consistent cash flow, I would assume. Now, the reason we are taking a look at them, they were down on the day, not a lot. There was not a lot down today. There were some that were down more, but I have not taken a look at General Dynamics in a while. And again, I know with the issues going on with Russia and Ukraine, some of these, like Lockheed Martin, have really become, in my opinion, overvalued. But potentially this one is starting to look fairly valued, in my opinion. So I thought we'd take a look at it. Not one that I usually cover. We are talking about General Dynamics, ticker GD. Right, out of the industrial sector, 52-week range. They closed out the day at $205.24. Looks like they're flat in the after hours so far, at least. 52-week range as low as $202.35, as high as $256.86. So right up against their 52-week low. Could drop a little bit further, but not much more. And then they'd be setting a new all-time low here over the last year anyway. Volume, typical volume, 974 million. Today's was average volume 1.2 million. Today's was 974,000. Looks like a previous close was 205.25, so just a slight sell-off from the previous close there last Friday. Market cap of 56.305 billion, a beta of 0.83. They are less volatile than the overall market. Price to earnings PE ratio, not the lowest, but 16.81 is about average for the overall market anyway. Earnings per share, EPS, is very nice at $12.21 per share. Next earnings date is coming in somewhere between July 25th and July 31st. Look for that. Forward dividend is $5.28 paid out on the year. They are a quarterly payer, so divide by 4, though we will see what they pay per quarter per share in a little bit. Decent dividend yield, very nice dividend yield, 2.57%. Ex-dividend date, April 13th was their last one. It looks like they paid out on May 12th. So if you were to buy them now, you would be in line for the next dividend. And according to Yahoo Finance, where I pulled this information, they have a one-year target estimate of $261.22. So it speaks to some potential upside appreciation. They see them setting a new all-time 52-week high here as well. So that's something to note. Excuse me. Now let's jump over and look at dividend yield theory. That's out of statistics. If you were to go to Yahoo Finance where I pulled this information, go to statistics, kind of scroll down to the bottom under dividends and splits. Take a look at their 5-year dividend average, and you could use a 10-year average if you wanted. They just used a 5-year here, so I'm going to use that. 2.32% dividend yield. Compare it to their forward, what they call forward or current, same thing, 2.57. If it's higher, which it is, it speaks to some potential undervaluation here. So according to dividend yield theory, this is potentially undervalued. Not a lot, but slightly undervalued currently. Nice payout ratio, very low, 30.93, so they have a lot of room to grow that dividend in the future. Now let's take a look at free cash flow. We want growing dividends and growing free cash flow because they pay dividends out of free cash flow. So long as the free cash flow is growing, typically that will give them a runway to increase those dividends over time. That keeps us out of trouble and keeps the payout ratio low so that they continue to do that into the future. Or if they had to hit a bumpy quarter or something, they've got a little bit of buffer to accommodate that, right? So 2019 free cash flow was 1.9 billion, 2020 2.8, 2021 3.3, 2022 3.4, and we haven't jumped into, they haven't reported yet in 2023. So from 2019 to 2022, nice steady growth. That's very nice to see. Not a lot of growth from 21 to 22, but that's all right. From 2019 to 2022, you just want to see growth over time. That's what we're looking for. A little bonus here, they are repurchasing their own stocks. So that is nice to see. You want them doing it when their prices are low, though. So you want to see when they're buying those back to make sure they're getting the best bang for their buck. Again, this information was brought to you by Yahoo Finance. I always recommend more than one site. So another one that I like is stockanalysis.com. I'm not affiliated with either site, just two sites I like to look at. Make sure that the information you are getting is accurate by back checking it against another source. Right, still talking about General Dynamics. They have 10 stock analysts that have taken a look at this. They call it a consensus buy. I would tend to agree if you were interested in this company. It's looking attractive, at least fairly valued, maybe slightly undervalued right now. They have a low estimate of $220, so they potentially see it coming down a little bit. Average estimate, or I'm sorry, it's currently lower than that. So it's lower than their lowest estimate currently. So if it came back up, it would be a 7.19% increase in the stock price from where it currently sits. Their average is $254.50. That would be a 24% increase in the stock price. And if it happened to hit their high of $283, that would be a 37.89% increase in the stock price. And this is a little higher than what we saw for Yahoo Finance. Yeah, I'd go with their average. That's pretty close to what we saw from Yahoo Finance there. So you're seeing some numbers line up here as well. Now, another one that I like under stockanalysis.com, under their financial efficiency, right? I look at return on equity and return on invested capital. I like 10% or better, or you could compare this with their industry average. So you'd want to compare General Dynamics to companies like Lockheed Martin, for example. That would be one, and make sure that they're in line with it. But this is very nice to see. Return on equity, 18.7%, over the 10% that we like to see, or I like to see. Return on invested capital, 19.3, definitely over the 10%. I like to see almost twice as high. So very good numbers overall here. Nice to see. Let's jump over and look at the dividends. Now, this is not one that I own. It is on my watch list. I would like it right up against its 52-week low, that 202, 203, even setting a new 52-week low. I'll be honest, I'm kind of watching this one. A couple others, Lockheed Martin being one. They've really shot up with the war there in Ukraine, and I think that whenever that settles out, some of these may pull back even further than their 52-week lows. So I'm kind of watching these for now, not really dipping into them. But like I said, if you're looking for something in that sector, I wanted to take a look at it and make sure I'm covering as many stocks as I can out there to give you guys an idea where there might be some value in the market. All right, so again, low payout ratio, though this one says 41.73%, so not exactly in line with what we saw on the previous page, but pretty close. Dividend growth is 5.59, so it is growing over time. That's nice to see. Quarterly payer, as we said, currently $1.32 per share. They recently raised it. Back in January, they were paying $1.26, so they just jumped up to $1.32. So that's nice to see, and you can see they are on the January, April, July, October payout quarters or months, but quarterly payer here, and you can go back all the way to 2021, which is what I did, and they were paying $1.10 in 2021. In April, they raised it to $1.19, raised it from $1.19 to $1.26. So it looks like you're probably, if history holds, they just raised it in January. That looks to be the month going into April that they raise it. So you probably won't be due for another raise until next April's dividend, right? So probably $1.32 for the remainder of the year here. This is my investing criteria. You go ahead and pause it and take a look at this if you want. If you watch my videos long enough, you've seen this several times, but if you haven't, go ahead and pause it and run through this real quick. This is what I use to either add stocks to my portfolio, a high level, whether I want to do a deep dive, it's got to meet 4 of the 7. If it's a financial company, 5 of the 8. And then I'll do a more of a deep dive into the revenue, balance sheet, and that sort of thing if I'm interested. Well, that is it. That is General Dynamics. Let me know what you think. Are you invested in this sector, the defense sector in general? You know, maybe you have Lockheed Martin. Maybe there's some other ones. Huntington Ingalls is another one I think is a decent one there. They build boats. But General Dynamics is what we're talking about today. Is it in your portfolio? Is it one you're watching? Are you avoiding that sector altogether because you're anti-war? Some people are like that. Similar to the sin stocks, they just avoid them altogether. But looks fairly valued or maybe slightly undervalued now. Let me know what you think down in the comment section below. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Join us on this journey to financial freedom. Join the vested interest community, trying to build a like-minded community of dividend growth investors so we can share our experiences, share our knowledge, share things that went wrong over time, right? We can learn from each other's mistakes as well so we don't repeat those mistakes ourselves. Just trying to build a community where we can share our investing journey together and help bring some light into things that we might not know. I know options is one that I've recently jumped into, and some people have dropped comments on things that they've done options wise that have really helped out. We all have something to offer, so don't be afraid to drop your comments down below. If you have a stock or company you'd like me to cover in the Stock Pick of the Day series, go ahead and drop that in the comments down below. I'll work it into the rotation. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. And this is Shane signing off, wishing peace and prosperity to yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by, and we'll see you in the next one. I'm not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion and investing in for educational and entertainment purposes. Investing involves risk and money. Should never invest any amount not comfortable losing. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.